What's up, y'all? Welcome back to the Mining Pod. For today's show, we have Beau Turner, the CEO and co-founder of Abundant Mines, on to talk about Pacific Northwest Bitcoin mining. Now, y'all may not know this, but Oregon and Washington have some of the lowest power rates in the nation, but there's not as much Bitcoin mining here as you might think. There's still more than you might have suspected, but given how low the power rates are, there's not as much as we might expect. Beau breaks down why that is and some of the bottlenecks for getting more Bitcoin mining into these regions, as well as the curtailment programs that are very nascent but could bring more into Oregon and Washington. We also touch on how the hosting market has changed since the halving, ASIC market dynamics, now that there is not as many buyers on the market with AI and HPC pivots, and what AI and HPC means for Bitcoin mining's growth potential in the United States. Hope y'all enjoy this one. Really liked having Beau on. He's a fount of knowledge for Bitcoin mining in this region, so y'all enjoy. You ever get into your buddy's car and think, dude, how do you live like this? There's half-eaten Taco Bell on the console, a pile of garbage and fast food cups and bags, rumbling in the trunk. You look behind you under your seat and you're pretty sure you saw something move, but you don't know what? Well, how do you think your Bitcoin miner feels if you're not keeping on top of your filtration game? Y'all need to get on Colorado Air Filters. Colorado Air Filters is a major supplier of air filtration systems for Bitcoin mining sites. And they're currently running a summer sale on their inventory, so now is the time to act. Whether you need HEPA filters, new shipments or installations for your containers or your large-scale mining facilities, retrofitted buildings, Colorado Air Filters has it all. And units are ready to sell now. Contact sales at coloradoairfilter.com and use the code MININGPOD to claim 15% off today. Again, that is sales at coloradoairfilter.com with code MININGPOD.
Hey, Will here with Blockspace Media. Did you know that we have individual feeds for all our shows? If you're watching the Mining Pod, Bitcoin Season 2, or the Court Show, be sure to check out the individual feeds. You can find them on your podcast player of choice, whether that be Spotify, Apple, YouTube, etc. Just type in Blockspace Media and you'll find all our shows pop up, or just type in the individual show name like the Mining Pod or Bitcoin Season 2. Be sure to hit that subscribe and give us a 5-star rating so we can continue to bring you the best content in Bitcoin.
Mr. Turner, welcome to the Mining Pod, sir. How you doing?
I'm doing great. Thank you for having me on, Colin. It was great to see you this last weekend.
Yeah, absolutely. So we brushed shoulders at Bitcoin is for Everyone in Portland. We didn't get a chance to talk, and I missed out on the Mine Tour, which I am lamenting, but hopefully next month I'll be able to go on it. But happy to get you on. Really wanted to give some of our listeners a kind of bird's eye view of Bitcoin mining in the Pacific Northwest. I think it's not an area that people think about when they think of Bitcoin mining. Usually they think of Texas. Maybe they think of other places in the US like the Southeast or New York and things like that, upstate. But there's actually quite a lot going on here, and Abundant Mines is a part of this puzzle. So could you just start off with giving us a brief intro into how you got into Bitcoin mining and how you founded Abundant Mines? Because I think this is an interesting founding story. I've never really heard of the kind of partnership you have with your co-founder, so to speak. So
it's a long and winding road. The short version is my wife and I saw the promise of mining in 2021 after having been exposed to Bitcoin and really wanting to get fully out of our real estate positions, which was a majority of our net worth. And in 2021, I was feeling confident enough in Bitcoin itself and seeing the promise of passive income through mining that I thought, okay, you know what? Let's go really deep into this. We're going to sell one of our properties and get some computers and send them to a host and see how it goes. And we were expecting to, within a couple of weeks, be online and hashing and making good mid 5 figures a month in profits, because 2021 was a great time to be online and mining. And it was exactly the opposite. It took, months and months before we could ever get a single machine online, horrible communication, really quick failures, 5-figure repair bills, just an absolute nightmare of a business experience. And at the time we had just gotten engaged. So this was a kind of a wrench thrown into wedding planning, unfortunately. And so she was very gracious about the whole thing. I mean, I was feeling pretty defeated and really didn't know what we were going to do next. And luckily, she was a believer in Bitcoin, and she's a believer in me. And so we decided, you know what, we're going to build our own facility, and we'll do it here in our backyard where we can control the experience and actually guarantee some level of things getting done right. And so Abundant Minds was started, and we found our spot to set up in just a few hours from where we live along in the Columbia Gorge. And along the way, we were originally just intending to mine ourselves. You know, we were really just looking for quiet stacking, dollar cost averaging through our electric bill, making that sweet orange cash flow. And we decided, hey, this was a really rough entry for us into an industry where we felt like we had some competence and actually we're not coming in super green. And maybe we should open up this service to people who are like us, who are looking for a way to get into mining without the headache and with somebody that they can trust. And so we decided to open up part of our capacity to clients. And since then, we've onboarded now hundreds of people to get into mining and have their first exposure. And probably the most satisfying part of all of that, apart from just it working and us now having 5 facilities under our belt and working on the 6th and by far the largest, is how many people we've given their very first exposure, not just to mining, but to Bitcoin itself. So I always loved the idea that I could play a part in orange pilling a part of the world and in helping to build that revolution. And I never thought that it would be through mining, but it turns out that's a great vehicle to not just get people what they want, which is income, and income denominated in the best money in the world, but also a whole educational on-ramp that exposes them to the core infrastructure of how this all works.
A lot of threads to pluck there. The first one, Bitcoin mining, I've always found really grounds Bitcoin in the physical realm for people. And so I've been screaming at my dad about Bitcoin for, almost a decade now. And the thing that finally got him to actually get what I would consider a meaningful position was buying Bitcoin miners and mining Bitcoin. Mm-hmm. He's like a Ron Paul era gold bug guy, not like a value investor type, but he could understand the value behind it. He said, oh, there's electricity going into this. It costs something. It's like gold. You have to extract it. And that really made Bitcoin click for him. And so to me, it's no surprise that was his first foray into it, honestly, is just actually mining Bitcoin, because otherwise he just couldn't bring himself to buy it. The irony, obviously, is like part of it was me like scheming. It's like, this is how I'm going to get you to have exposure. But, after the agreement, the hosting agreement was done, we ended up selling our rigs. He keeps asking me how much he made. And I was like, well, you made this amount, but you would have made more if you just bought Bitcoin. He's kind of like, oh yeah, I realize that now. But to me, I was like, it was like, you either are not going to buy Bitcoin or you're going to mine it. So to me, it was a win-win. The other thing I wanted to just touch on really briefly, your story of having kind of a disastrous hosting experience in 2021 is, I think, not universal amongst American Bitcoin miners, but after the China mining ban, obviously a lot of business came to the US and a lot of people thought, wow, hash price super high, difficulty just got cut in half, Bitcoin's running. I can't lose with this, right? But what I love is that y'all had a difficult initial experience and then you just doubled down and said, actually, we're just going to do it ourselves. So what made you decide to mine in the Pacific Northwest specifically? Was it just because it's home for you? And a 2-part for that question, if you could put your finger on how much hash rate is in the region, could you give us a ballpark?
Yeah, I won't pretend to have a crystal ball into exactly how much is here, but I have asked around and I know people have better data than me. And I've heard anywhere from 2 to maybe 500 on the high end megawatts across the Pacific Northwest. And I think of that as being Oregon, Washington, Idaho, maybe parts of British Columbia. So the reason for choosing this region, one, our experience was we sent these things across the country and it was too far to quality control. So having it in our backyard is one way to guarantee, hey, if you can get in a car and check in on it with just a couple hours in the car, that's a way better model than needing to get on several legs of flights to be able to quality control what's going on with your miners. The second is this is like one of the most renewables heavy grids in the world. So it's a great place to mine from the standpoint of using energy sources that most people can agree with. And it's quite underutilized. I mean, 200 to 500 megawatts sounds like a lot, but when you compare it to Texas with several gigawatts, it's really not very much. And so it kind of puzzled me that there were so few people choosing to optimize for this region. And we can talk about later why that is and kind of what leads to that. But, you know, between the energy source, the fact of it being in our backyard, and the climate being so favorable year round that machines are going to last longer, they're going to run more efficiently. You're going to have way less maintenance in terms of managing repairs because everything's too hot or too dusty. We kind of have what I would term Eden for Bitcoin miners up here. And for some reason, Eden hasn't been pillaged yet. But if you were around mining in 2018, you know there was a huge rush up to parts of Washington. So that probably has been part of the reason that it hasn't really proliferated up here, is because those early movers in a lot of ways poison the well for large blocks of capacity to be developed up here. But I do see it coming back, and I hope that we're part of that revolution in a good way of bringing it back to the Pacific Northwest.
I've heard that before I used to work at Luxor Technology, and the CEO, Nick Hansen, lives in the Seattle area. And he mentioned the same thing, how there used to be, like, Washington was, before the China mining ban, was like one of the principal states for Bitcoin mining in the US. Yeah. What did the miners do to piss off people so much that the mining industry there contracted, at least compared to other states?
The big thing is, especially in bull runs, so many people that have really no business getting into this decide that they want to start mining. And so they call up every utility under the sun to see who has capacity and where they can set up. And so a lot of the resistance came from just an inundation of calls of people trying to set up capacity that didn't even really know what they were asking for. And this is something that I went through as a first-time mining site developer. When I first started talking to utilities, I could tell that there was a little bit of frustration on the other end with how little I knew about some of the process of setting up these facilities. Even though I had done real estate developments before, I had an engineering background. The world of getting energy supply is a totally different animal. And so the reaction in a lot of cases was just due to not having the resources. You can imagine that a lot of these utilities just have one, maybe two people answering the phones and dealing with requests, because in the normal course of business, that's all that they need. They don't need a ton of overhead. They are not by any means specialized for an huge influx of large interconnection requests. So there's a real burden to these organizations when people come in asking for 10 megawatts so that they can set up their personal facility. And you saw a backlash where these utilities decided that miners would get a very special rate class where they often had 30 or 40% higher costs than anybody else setting up. So if you had a data center, you might get 4-cent power. If you disclosed that you were going to mine Bitcoin, then your power cost might be 7-8 cents, which in many cases makes it unworkable if you're trying to set up the infrastructure yourself. That's more like a hosting rate. So that, coupled with some early operators, and we're still picking up the pieces of some of these stories, who did not build in the right way and had either accidents or ran off without paying their power bills. I mean, mining is now a very, I would say it's becoming a very professional and sophisticated industry, but there was a time where it was that weird Wild West thing that people did with very little oversight. And we are still in Oregon cleaning up some of those early mishaps that people had with utilities, where they did not pay their bills, did not build things properly, in some cases injured people. And so it really is a process of sort of level setting again and letting them know these are very different. We're very different than the people who were here 7 years ago now, who were just figuring this out. This is a very different industry, and we have very different ways of integrating and interacting with our communities.
You'll have to maybe forgive me for this comparison, but looking back, 7 years to like 2018 or so, right? Or just like, let's say pre-China mining ban, it reminds me a lot of the ways in which the marijuana industry out here has been kind of blacklisted by a lot of people. I live in Southern Oregon, and there are a lot of vineyards down here, and the Applegate region became a haven for pot farmers because the real estate was relatively cheap after Oregon legalized weed. That was in like the early 10s, I think. And then all of these vineyards and all of these family farms were just like absolutely incensed by all of these kind of fly-by-night operations. And then obviously we know what happens next. The green rush kind of blows itself out. There's so much supply that a lot of these things end up going under. And then they leave behind just these really dilapidated and sometimes in some cases, poisoned farms in their wake, right? Because they just kind of came in and tried to do things slap happy and then it didn't work out. I can't help but see some parallels between that. Obviously, it doesn't have to be that way, and there are ways to clean it up. But going back to one of the things that you were saying earlier about Oregon kind of being an Eden for Bitcoin mining, when I was doing research at Luxor, I would look at power rates, average industrial, residential, and commercial all throughout the U.S., and I was shocked at how low Oregon was. It's some of the lowest. Oregon has some of the lowest power costs in the U.S. I believe for residential, the average hovers between 12 and 13 cents a kilowatt hour. Obviously, if you're mining Bitcoin, that's not great. But if you're getting commercial or industrial rates, it's between 6 and 8 cents. So very favorable depending on what machines you have. And a lot of that has to do with what you were saying earlier. There's an abundance of hydro in Oregon, more than most people realize. So you said that the industry hasn't taken off here compared to other places like Texas for a couple of reasons. What are some of those reasons? Why haven't we seen more growth in Oregon and Washington?
There's so many factors that go into this. I mean, one is you mentioned that we've got pretty attractive industrial rates, but they're not as attractive as places like Texas or the Southeast. So part of the reason that I think Oregon was overlooked in even the 2018 rush, there's so much more capacity rushing to Washington than Oregon because Oregon was a little bit more expensive than Washington. So everybody chose to go as rock bottom as they possibly could in terms of power pricing. That's where you had the easiest time finding the lowest cost power. But one of the barriers that I find nowadays to people setting up here, apart from it being slightly at a premium, is that you can only get relatively small blocks of capacity at one time, depending on what your rate structure is, how much power your utility actually generates themselves. Most of the power by public utilities, municipalities, co-ops in this region is procured through BPA, which is the Bonneville Power Administration. That's the federal agency that manages the Columbia hydropower network. So all along the Columbia, they've got these 20 plus dams that range from a couple hundred megawatts to a couple gigawatts. And they have enough capacity to serve the region, but only so much capacity to serve at those very low rates that are encompassed within that base hydropower network. So when you're going to set up, say, a new mining site, you can only set up to 9.9 megawatts without triggering a brand new type of rate schedule that is way higher than makes any sense to start mining with. So if you can only set up 9.9 megawatts at a time, you're naturally ruling out the largest players in mining. They, in many cases, won't even look at a site unless you've got 20 to 50, even 100 megawatts in a block. It's part of why Texas and places like that are so much more attractive, is it's very easy to get that large of a block of power at an attractive rate, especially if you're willing to play the curtailment and demand response games. Here, not so easy. You've got to very intentionally locate your sites in different parts of the region in order to get that large of a block of capacity. So it's a great fit for us because we like to develop small sites. We like to have as many communities as possible impacted by mining in a positive way. And we like to spread ourselves over the region rather than just having one huge scale facility that we're developing out. So it's a great fit for our model, but it keeps most people who are looking at getting into mining out because they're trying to allocate either a larger block of capacity or a larger amount of capital. And the administrative and operational overhead of trying to build out 10 sites versus one is just, that's a barrier to entry that most companies are not willing to suffer.
So that's a little unintuitive to me, or at least contrary to what you usually hear. Typically in a place like Texas or other, states, more power equals lower rate because the power company can lock in, a pretty large consumer of that load, right? And they have consistent revenue from it. Why is it the opposite here? Is it regulations to make sure that residents have power first? Is it a political thing? Why is it inverted in Oregon?
So part of it is because of the structure of most utilities. If they're procuring through the Bonneville Power Administration, Bonneville only has so much generation that they themselves are producing. So you can think of it as they have an expectation of how much power they think they need to supply to the region in order to meet the needs of everybody who lives here in the Northwest. And anything over that, they actually have to go to market to procure, which in many cases is going to be quite a bit more expensive than them generating their own hydropower, which is pretty low in terms of fixed cost. So the way that they've designed their rate tiers is to discourage people from putting on huge blocks of new demand, because every time they do that, it means that they have to go out and procure much more expensive power to serve you. So they've only outlined current capacity needs as well as future capacity needs to meet a certain level of growth. And that is not in alignment with the way that AI data centers and Bitcoin miners like to expand, which is in huge blocks all at once.
So where else are they going to get power if it's over that, threshold of what they consider conservative enough to be able to meet their needs? So like, if I understand correctly, it's a BPA, Bonneville Power Authority. They own the dams. Am I right? So, but where are they going to get their power otherwise? Like solar farms, there aren't many nat gas plants in Oregon, but there are some. Are they going to have to go through those avenues then? Is that correct?
They would have to start procuring from independent power producers here in the region, or even pulling in power from other regions. So as far out as, somewhere like Utah, which is a couple states away, but still close enough that you can truck in that power over transmission lines. And that's going to introduce a very different power mix as well. You might be relying more on coal or natural gas generation, and you're going outside of the currently available resources in the region.
So for BPA, when I think of hydro, I think of it overproducing power, one of the more abundant forms of baseload, kind of up there with nuclear in the sense that once you have it running, you can really juice it, right? And you're not constrained, unless there's a drought, with the supply of the fuel, like with natural gas or something like that, right? So are they just being conservative, or is there really not that much to go around?
It's a mix of being conservative and just it's seasonal variation. So at different points of the year, in the shoulder seasons, especially when there's low demand on the grid, there's a ton of excess hydropower that if you're trading on the open market, for example, you might see 1 or 2 cent pricing. You might even see negative pricing on hydropower in the shoulder seasons. But that's only for...
Speaking of like winter and spring here, right? The wet seasons in the Pacific Northwest.
Exactly. And those are usually the times, especially the spring, where there's minimal demand for heating or cooling loads, because we have a beautiful climate up here. It's easy to have your doors open all day without asking anything of your HVAC unit. So that's a huge portion of the demand on the grid in general. And so when that is not called upon, you do have huge spill events where a lot of power goes unused, but it's not year round. So BPA has to plan for having enough capacity to meet people year round, which means that in those shoulder seasons, they've got more than enough. And then at other times of the year, if they allow too much load like ours, that's of a fixed load factor or 100% uptime, they might not have enough in those really high demand periods, either the dead of winter or the hottest part of summer, when people are calling the most on the grid for their heating and cooling needs.
We are Cleanspark, America's Bitcoin miner, a publicly traded company with the largest operating hash rate, powered entirely by self-operated infrastructure across 4 states. This is our proof of work, and we are setting the standard for what's next. Learn more about the intersection of energy and Bitcoin at cleanspark.com.
So when we were hopping on the horn just, pre-game talk, so to speak. You were mentioning that curtailment programs like we see in Texas, or even I'm from Nashville, Tennessee originally. The TVA is starting to boot these up too, and you see them in other markets like PJM and stuff like that. They're not as common in Oregon with BPA and other providers. Why is that? What needs to change for that to happen? And is the fact that there's not curtailment contributing to the problems that we just discussed in terms of getting large blocks of power? So sorry, like 3-part question, but what's the deal with curtailment in this state?
Yeah, curtailment is a relatively new aspect to the power markets here in the Northwest. I would say it's only about a year old at this point in terms of them even starting to introduce it. The program that is relevant to this is called the Western Energy Imbalance Market. So we are beginning to integrate with the other grids in our region, the California ISO, as well as the Southwest Power Pool, and basically starting to form that connective tissue where you can trade power across markets more effectively, and also integrate demand response and curtailment programs, which are much more common in different parts of the country. But because we have such a pretty even keel climate, and at least historically have had more resources than needed to address the needs of the population, there's been no real need for curtailment apart from, emergency purposes. And even that's rarely, if ever, called upon. And so until there was, just in the last few years, much faster load growth across the region than anybody was planning for 10, 20 years ago, there was not a huge need to have these programs in general. But now that you're seeing such a fast outpacing of the supply of energy by the new incoming demand of it in the region, they're starting to have to think about ways to increase the reliability of the grid. And demand response is the cheapest way that they can possibly institute that, much cheaper than them going out and developing new generation. And so it's relatively new. We are still in the pilot phase of many of these programs. Only one of our sites of the 6 is going to even have a curtailment program to start out with. We're still working on bringing those to the other utilities because in general, there's not a huge need. And the way that market pricing works for most of these utilities, there's not a huge benefit until someone like BPA adopts the more favorable programs that can give miners this advantage. But not just miners, anybody who can consume energy in a more flexible way benefits from this. And it just hasn't been one of those mainstays of the Northwest grid yet. But I do see that it's coming, albeit slower than I would like, because it's something that all miners are effectively have superpowers to participate in is demand response and curtailment. And usually the benefit far outweighs the downtime. So I'm very excited to see that come. But that, coupled with everything we talked about before, is probably one of the reasons that you haven't seen as much proliferation of mining up here, is that they aren't rewarded for doing one of those things that they tend to do best, which is turn off when they need to be turned off.
What has your experience been in terms of setting up operations and securing PPAs? Has it been pretty easy as long as you're working within that 1 to 9.9 megawatt range? Because I think that, when we talk about Bitcoin miners in other places like Texas, it's such a free market that it's a lot easier for miners to boot up. And then, my tribal part of my brain thinks Oregon is a pretty blue state. You probably shouldn't tell people you're mining Bitcoin if you don't know who they are. Otherwise, they might call you a crypto fascist or something like that. But I'm curious, has it been generally pretty easy, or is there a lot of red tape to cut through?
I'd say the red tape is mostly perceived, and it's mostly just in how your community receives you. So when you go in the right way, when you speak to your community, whether it's city council or just the leaders in that community, it's so much more helpful to the whole development process if you help them understand what you're doing and make them comfortable with it. So I've never had anybody just outright say, you can't do this here. I have had a lot of people be very questioning and curious. because they're not so sure of what you're doing. And anytime, I mean, the saying is that the confused mind says no. So if you're asking for permission to do something and they don't understand what you're doing, it's way easier for them to say no to you or put up barriers that are unnecessary rather than, participating in local town meetings or city councils or any gathering of decision makers and helping educate them. It's really part of the reason that we started prioritizing education, is not just because of the people that mine with us, our hosting clients, but also everywhere that we develop a site, we have to do local education to make sure that they understand and are comfortable with us so that we don't create an enemy of exactly the people that we want to support us being there. And so that is the main thing that I'll say. There's no active regulation that prevents miners from setting up in the Northwest. It's mostly perceptual and cultural. And to your point, those can be sometimes the biggest barriers to getting anything done, is just people's entrenched beliefs around what they think that you're doing. And so that's been one of the most important things for us to get right in every new site, every new location, because we are not just locked in a single community with a single site. We have to be very good at this. We have to be very skillful at communicating what it is we do and why we're doing it. And not only that, but why it's a benefit to the community, because why should they want us to come if all we're going to do is take all of their energy capacity? Well, there's all of these great things that come when you have a business like us that can operate within the energy markets in the ways that we do and provide local jobs. And so as long as you can communicate effectively what that picture looks like in the ideal vision, I've found nothing but support and interest. And in many cases, people are interested even in how they can get involved, because this is a really exciting space to be in. It's just often colored by that initial skepticism and fear because, like it or not, this is still a very poorly understood space. And it's our job to educate everyone who we come in contact with to make sure that they could reap the benefits and that you can actually exist peacefully and operate your business.
Yeah. And unfortunately, there are narratives that push it towards a kind of partisan lens, right? I mean, I think this has actually been one of the things that, on the policy and regulation front, net, the Trump presidency has been better for Bitcoin. But from the, in terms of perception and pop culture, I think it's been a net negative because like people see, World Liberty Fi, they see the Trump meme coins. I still can't believe that that's not just a fever dream that we all collectively cooked up. And they see the Trump trading cards and all these other things. And then it just becomes, oh, well, that's now associated with Trump now. That's why I think something like Bitcoin is for everyone. That was the conference, for those who don't know. It was just hosted in Portland last weekend, or the weekend of August 1st. I think that's a really, really beneficial thing, to have something like that in a very blue city like Portland, to show that this is not an ideological thing unless you want it to be. And it's also agnostic to your political beliefs. It's just a tool, right?
That's so important. And exactly what you said is true. We had a project that thankfully has moved on to the next stage. But the very first piece of resistance we got from a decision maker was, oh, anything that he's supporting, I'm not sure if we can get behind. It's a very, very interesting tone taken of, oh, this Bitcoin thing has anything to do with the current administration. I don't know if we can be in support of this. Thankfully, overcome into the next stage of negotiations, but that was honestly surprising to me that would be a barrier to bringing something like this that can benefit communities that often have no other really solid options for what to do to grow and develop. Is just that kind of tribalism. So any time that we get to overcome that is a really important opportunity.
It's a big win for sure. Okay, so moving on to some broader topics. Speaking of barriers to entry, hash price has consistently been one of those barriers to entry for a lot of Bitcoin miners, or it has been the thing that makes the bottom drop out for them after they, get booted up and have been mining for a little bit. But recently been recovering thanks to Bitcoin's price appreciation. It's still historically pretty low, but margins are not at all-time lows because the new generation machines like the S21 are very energy efficient. But right now we're at about like $60 per petahash per day. So just, 10,000 foot view. What are some of the biggest changes in hosting market dynamics since the halving?
Yeah, since the halving, that's going on a year and a half ago now, a little less than a year and a half. Definitely post halving, there was a lack of interest, I would say. It was much slower for people to get interested in the space just because economics were so depressed. Now that we're at least in $60 petahash range, that's about 35% off of the lows a couple months ago, which is a great rebound. I mean, that I've definitely seen interest uptick just from that and people wanting to get into the space. And largely pricing on machines has stayed level. So profitability has somewhat returned, and you haven't seen that reflected in the commodity pricing of the ASICs as much, which is always helpful. If people can make more money and not have to spend more money just to get in, that entry barrier stays at least low for the time being. I don't know how long that'll last, especially if you consider us in the middle of a bull market, which I would say, depending on the week, where it looks like we are, but kind of bipolar depending on what week you're looking at. But broadly, I do see a return of interest that is much more reminiscent of the periods when mining is good than, the doldrums of a couple months post halving. And you've also seen that pretty significantly impacted, at least in our business, by Big Beautiful Bill, which means that even with the same profitability, even with the same return metrics, you get 100% bonus depreciation instead of 40% in the first year, which immediately gives investors a much larger reason to decide to allocate capital somewhere if they know that it's going to help them offset taxes.
Yeah, you took my next question right out of my mouth. So how does that depreciation clause, and for those of you who don't know, I wrote about this for the Blockspace newsletter a while back, and there are really three major changes to the tax code with the Big Beautiful Bill that really concern miners or mining companies. The one that Beau is talking about is 100% depreciation first year of hardware being purchased and deployed. The second one, which is less for Bitcoin miners, but more for software and service companies, or rather hardware companies, is that you can depreciate real estate for a manufacturing facility or a producing site. So maybe that has ramifications for onshoring ASIC manufacturing. We wrote about that for the newsletter last week. But there's also the big hit, though, for some miners is there no longer these tax credits for solar and wind. We won't talk about that, but specifically for the 100% bonus depreciation on hardware, how is that changing how y'all are approaching expansion? And have you seen that spur interest with some of your hosted clients of like, oh, well, I wasn't going to deploy more capital into this, but now that I can do 100% in the first year, I might as well. How is that changing how people are approaching expansion?
We've definitely seen it change the mindset of existing hosting clients as well as people who are looking at getting in for the first time, that now that they have this very powerful lever in the first year to offset what would have been quite a bit of taxable income, they're much more looking at this and not paying nearly as much attention to how quickly do I break even, what are my margins. It's kind of like, as long as I get to write it off, like whatever, I hope that I have a very long and successful investment with you, but this is really coloring the decision of a lot of investors. And, I don't like for people to let the tax tail wag the investment dog in terms of giving people advice, but it is a very powerful lever, especially for what I would consider our ideal client, which is a higher net worth investor. Many of them weren't even looking at mining before and now are seeing it as this really golden opportunity for them to get into something that is cash flow producing, gives them exposure to a market that they've seen a lot of interest in recently and a lot of support for recently, and get exactly what they would get in many other investment vehicles that they would look at with similar characteristics. I mean, this kind of immediate expensing or immediate write-off is the reason that a lot of investors go for alternative energy investments and many other alternative vehicles. And opening that up to mining hardware just makes it that much easier for them to at least risk a portion of their portfolio to give it a shot. So I do think that it will continue to be a catalyst especially for those investors with a potential tax liability to look at as a reason to get into mining.
There's kind of an interesting double-edged sword here, talking about, the tail wagging the dog. If an investor is saying, "Oh, I'm just not even going to really worry about the ROI for this thing because I get this 100% bonus depreciation out the gate," it might skew incentives a little bit for people to throw in money that they maybe shouldn't be. I don't really have any questions on that. I just think it's interesting thinking about the ways in which sometimes you can have too much of a good thing with stuff like this, right?
I say that don't let the tax tail wag the investment dog, because I know that I have seen it in myself. I've seen it in friends. I've seen it in other investors, that you lose sight of the big picture of why you're investing at all. It's to grow your wealth. It's not just to avoid paying taxes. And if you make a bad bet that loses 100% of your principal because you were trying to save 30 or 37% of what your tax liability was going to be, then that was ultimately a bad move, even if you saved on taxes. Now, I wouldn't discourage anybody from getting into mining, because obviously I've aligned a huge portion of my net worth to mining, so I think it's a good vehicle. But I don't like to see people lose sight of why they're investing in the first place, just because they're trying to get this one. It's kind of like going and buying something at the grocery store because you have a coupon, even if you don't want it. I don't want to see that from people and then them get soured. It's also just kind of kicking the can down the road in many cases. When you take these incentives up front, you still have the following tax year to have a whole new situation to deal with. So it's a lever to pull, but that lever is spring loaded. So you have to figure out what you're doing the next tax year as well. And if the answer to that is just buy more miners in 2026, then I'm not going to be mad at you. But there's no panacea in the tax world or in the investment world. So would always advise people to make sure that they're making a balanced decision.
So one last question here on expansion, and then we'll close on the data center question that I have in my back pocket. Curious to hear any thoughts you have or pontifications on the difference between ASIC market dynamics now versus 2021 and 2022, because you mentioned that prices have not been as sensitive and to Bitcoin price moves. And part of that is because obviously hash price has been trading in this like $30 to $60 range since the halving, basically. But we wrote a piece at the end of last year about how Bitmain might have gotten over their skis a little bit and overproduced and had too much allocation for their chip fab. And now they are really having trouble moving some of the S21 supply. I know a lot of miners were very cross with them after they put in these big pre-orders for S21s. Then all of a sudden you have the S21 Plus, the S21 Pro, S21 XP. And it was this rapid succession of pretty substantial, hash rate and efficiency gains for some of these models. And miners they ended up getting credits back from Bitmain, some of the big public companies. So I'm curious, from your finger on the pulse, are you seeing kind of demand soft to the point of where Bitmain is having to give way a little bit on some of these pricing terms, or just what are some of the general differences between the market now versus when you got in 2021, when things were very hot and there was a lot of demand in the US for these ASICs?
Yeah, there were so many things going on in 2021 that made it a different market to what we see today. I mean, one is that we were in absolute frenzy period in both Bitcoin in general and the mining market. I mean, you mentioned it in your question, which was, price has gone up a lot, but hash price is still, it's not what we would call, levels where people are really like jumping over each other to try and get into mining. It's more attractive than it was a few months ago, but it's by no means the levels that we saw post China ban, where mining was the most seemingly obvious place that you should be deploying capital to get like a 3 or 4 month return. And so I think that's really the big part of it, is that despite seeing appreciation in the underlying commodity and the Bitcoin, the actual profitability of the mining process has not gotten so elevated that Bitmain has the kind of pricing power where they can jack up the prices of these. I mean, you've seen kind of smaller elevations when we crossed over 100 pretty definitively. That was one larger jump. But I would say that since then there hasn't been a lot of appreciation in the actual commodity of the ASICs themselves. And that might also be because they're starting to see a little bit of additional competition, although not anywhere near a majority, but several other players competing in the ASIC market where they don't have the same level of pricing power that they might have had in 2021 when they were close to 90% of every ASIC being produced. They're still by far the largest, but I don't feel like they are going to have the ability to far outpace the others in terms of the premium that they put on those chips and those ASICs. So if we're lucky, I think that this cycle will look different in terms of ASICs not appreciating much in the way that they did in that 2021 frenzy, but mining economics continuing to get stronger just because there's more competition. And if I had my way, I would love to see mining just very gradually become more profitable and kind of have a much longer period of good times in the mining market rather than what was a very fast run up, a wild period of economics that were clearly unsustainable, and then a very sheer drop. It would be, I think, much kinder, although I wouldn't say that the mining market has ever been kind. It would be much kinder to people to have a smoother run up and just a gradual expansion of margins that last for a more extended period.
Yeah, man, there was a golden window in 2021. I think the high for the year for hash price was like $400 per peta. It was something above 400, because you had this just absolute, rocket fuel for it because difficulty got cut in half, obviously, and then Bitcoin was running at the same time. I'm curious, and this will lead into my final question. Also, how much pressure Bitmain's going to feel from the fact that you've really had over the last year, you've had a number of traditionally very important customers kind of take themselves off the market. Core Scientific no longer expanding, Iron pausing all of its hash rate expansion in favor of AI and HPC, Riot signaling that they're going to get into it, but not quite doing anything yet, right? So you have a lot of these public miners who typically, place hundreds of millions of dollars worth of orders for Bitmain's machines, totally pumping the brakes on it, right? I'm assuming that Bitmain is they're one of the most powerful companies in the industry and they're very smart. So they're no doubt looking for other jurisdictions to sell their hash rate to, right? We've heard rumblings that some mining is going on in China. That's kind of been a revived industry recently. Maybe they are self-mining there. So they're going to find a way to monetize that hash rate. But I can't help but wonder how much that's going to put pressure on that pricing from them and maybe put a cap in place for how much they can actually ask, considering demand is much softer now than it was a few years ago. But the whole AI and HPC race then brings me to my final question about what do you think we'll see in terms of miners competing for power with these hyperscalers and some of these traditional data center companies going forward, and maybe even particularly in the Oregon context, because most people don't realize this. Oregon has one of the largest concentrations of data centers in the US. It's nowhere like Virginia, right, where it's like 25% of the electricity draw, but it's a substantial amount considering the population here. And the reason for that is the baseload with hydro. Mm-hmm. I mean, do you think that we're going to enter a period over the next few years where maybe we see a plateauing hash rate in the US, or at least miners having to get very creative about how they're securing that power?
100%. I think the entrance of AI into the mix is a very important thing that did not exist in 2021, that had essentially no bearing on the market dynamics of mining. And now it's probably the biggest force that we don't know how is going to shape the rest of the mining industry. One of those is just power access. So the AI customers are much less price sensitive and usually far better funded than miners. And they are absolutely gobbling up the largest blocks of capacity that are available. So one catalyst that we saw for economics being so great in 2021 was not just ASIC supply chain, but also capacity supply chain, the ability to deploy not just more machines, but more megawatts. And I'm curious to see how much capacity actually gets developed, because there's a higher paying customer in town than miners. And whether we'll be facing the same kind of supply chain issue where there's ASICs that want to find somewhere to live, especially as economics get better, but there's no megawatts to deploy them in because everybody's running GPUs instead of ASICs. I think that that's going to be the story that is over the next couple of years at least. And it makes a lot of sense for miners to diversify into these other ways of monetizing their energy capacity. And I think is going to, as you said, put pressure on ASIC manufacturers like Bitmain to really have their margins come down to reasonable levels where it does make sense for people to still buy them. It kind of, that supply and demand curve or that cost curve becomes something that people can no longer resist. They're going to be forced to bring prices down to a level that they can still sustain moving that inventory. And I do see miners and these other types of compute loads joining forces in many ways because there is less flexibility in terms of how AI can monetize energy. There's less ability, although there are things being worked on to make sure that they can be more of a flexible consumer. For now, they are not as good at managing their energy curve as Bitcoin miners. And I think that co-locating them together is going to be a theme that you see quite a bit, so that you've got maybe 80% capacity dedicated to AI with this load balancing aspect through mining. And I think you'll see that proliferate in more cases co-located in the same facility.
Yeah, I'd be curious to see how that develops over the coming years. I mean, it's something we talk about a lot on the pod, and there are not very many miners, I think, that are actually, I don't think anyone's actually doing this at this point because they're still trying to figure out the kinks, but it's something we'll be keeping an eye on. Beau, any final thoughts before we sign off?
I just say for anybody who is looking onward from the sidelines, the mining market, that it's so much fun to be a part of this. And I think there is still so much promise in getting involved in mining in the cycle. And most people have just kind of written it off. I was listening to a roundtable earlier today, and they seem to think that mining economics are just not going to come back. And I take the exact opposite stance, that mining pretty much always has its day. And for the people who are deployed and operating and keep their facilities with high uptime and make sure that they've got trustworthy people that they're working with, mining can be a very rewarding place to be. And I don't consider myself a fool, and I've pretty much hitched my wagon to the mining train and all that comes with it. So would just encourage anybody who's thinking about getting into mining to make that jump, even with a small portion of your portfolio, just so that you can learn. Such a rewarding learning journey.
It's super dynamic. It's one of the most interesting parts of Bitcoin, in my opinion. And a lot of things can go wrong, but a lot of things can also go right? There are black swan events lurking around every corner that might actually help you, like the China mining ban. So, well, Beau, thank you so much for joining, man. Appreciate it. And we'll have to have you on again, sometime soon. This was a fun conversation.
Would love to, Colin. Thanks for having me on, man. Can't wait to have you up for a site visit.
Yes, sir. All right. Cheers, everyone. We'll see you all next week.